Welcome to the TU Market Show. In this episode we will look at why the UK banking system want Brexit and why they will welcome a no-deal Brexit with open arms. It's very much believed within the UK economy and a lot of the public that have voted either for Brexit or against Brexit is very much believed that leaving the EU will hurt the UK banking system and it will hurt the UK economy as a whole, but mainly the UK banking system. Yes, it will hurt the economy as a whole, and yes, it will hurt the UK banking system, but long term it will be a very, very positive event for the UK banking system and in return the UK economy. Now we're going to look at certain events that have occurred since the Brexit vote, which is linked to the UK banking system, and we're going to look at various events that are going to come up when we leave the EU, and certain effects that could occur upon a no-deal Brexit. Now on the night of the vote in June 2016, the pound devalued. Basically it took a major devaluation. It did. All within the space of 3 hours. And a few months after the vote, due to a lot of turmoil, change in leader, it slumped a bit more. It has rallied since in the past 2 years, but it did devalue and it is still down comparative to its levels before the Brexit vote. Now because the pound devalued so much, it triggered something called financial repression, where inflation is higher than interest rates, and this event is good for the UK banks. Also, the day after the Brexit vote, Mark Carney from the Bank of England come out and he provided a £250 billion Brexit package for the UK banking system, and obviously this was good for the banks. Interest rates was also lowered after the Brexit vote. Mergers and acquisition deals spiked, M&A deals spiked. The effect of this was more fees and commissions for the banks. Even in 2017, one new Chinese bank opened up every single week in London. That was just an inclination of how attractive the UK financial services and banking system has been for international companies post the Brexit vote. Also, trading volumes on the markets before the day of the vote and 6 months going after Brexit, the volumes spiked a lot. And because the trading volumes spiked, this means more fees and this means more spreads and commissions for the banks. And more fees, spreads and commissions for the banks is a positive thing. And also in 2019 we've got the EU new tax directive laws coming in. By the time they come in, we will be out of the EU. And this is a good thing for the UK banking system, because in return a lot of UK banks will attract international capital into the system solely because they don't want to be residing within the new EU tax directive laws, and this will be a positive effect for the UK banks and the UK banking system. Also, when we leave the EU, it's a sort of deregulation process. There's a lot of financial rules applied to the financial services of banks and brokers that reside under the European umbrella. And they do restrict a lot of these banks and brokers to embark upon business they do wish to embark upon. And the recent ESMA rules is a major example of this. So when we do leave the EU, we will go through a deregulation process, and this will take a lot of suppression away from the UK banking UK banking system and also UK brokers, and in return this will fuel growth. Also, a no-deal environment. If we do have a no-deal environment where we leave the EU, where just a lot of rules are ripped up, basically we are dragged out of the EU because Parliament voted down and we resort to a no-deal with the European Union, it will cause a lot of economic trouble. And if that does occur, Mark Carney in the Bank of England will prolong raising interest rates in 2019, and they will possibly leave it to early 2020, dependent on the economic environment and the effects post that Brexit caused and the environment after Brexit. This will be good for the banks because there's a lot of debt in the system, especially on the banks, and there is a lot of debt which is owed by the banks, and the interest rates rise will potentially cause a small or maybe a high or maybe a large wave of defaults, and banks don't like defaults. We must also look at the weight of the UK economy and financial services across the globe. 60% of it is estimated that 60% of all finance and funding in Europe is raised in London. Europe does know this. Also, London clears more euros than Europe do. So in basic, all the trillions of dollars and euros in or currency or transactions related to the euro, all the trillions of transactions, they're mainly settled in London, and there's more transactions related to the euro settled in London than what is settled in Europe itself. Roughly 40% of the global financial services market comes from London, the United Kingdom and British jurisdictions. And this makes us the global leader, and British jurisdiction the global leader in the financial services market share. And a Brexit, especially a no-deal Brexit, will increase this number. Plus a major volume of the global wealth resides within the British jurisdictions. It's not an exact figure. Some people say it's 40, other people say it's up to 50%, but the fact is a lot of the global wealth resides within British jurisdictions and the United Kingdom and London. In the post-Brexit environment, once we leave the EU, this will help build this number, and the trickle-down effect for the UK economy and the British jurisdiction will be positive. And because a lot of these events have occurred and a lot of these events are looking to play out, we did see a lot of the fear play out. Not from the Remainian side or even the Brexit side, but we see it play out in another realm. And this comes from America. Now, before the vote, Barack Obama come out and he said when it comes to a trade deal, Britain will be at the back of the queue if it votes for Brexit. After the vote, and even before, Lloyd Blankfein from Goldman Sachs CEO, he did say that Brexit will be bad for Britain. I believe he said on a few interviews and even done a tweet about it. Kind of rare. Jamie Dimon, the CEO of JP Morgan, he said that Britain will be worse off in a Brexit environment. And if we were to vote to leave the EU. Now, were these guys, JP Morgan, Goldman Sachs, and the President of America, were these guys looking to preserve the UK economy and its public? No, never. To be honest, it was quite amazing to see them coming out in public and announcing things like that. It was a sign of fear. Now, I believe they knew what the Tories and the UK banks were up to. I believe they was trying to preserve their businesses and trying to help contribute towards expanding their businesses from competition from the UK banking system, and they fully well know that UK voting to leave the EU will make the UK banking system much more comparative to Wall Street and the American banking system. Yes, the London City and yes, the Wall Street do work together. They're basically partners, but the fact still relays, and we always states, and we always must remember that they still are both competitors. Goldman Sachs, Lloyd Blankfein, JP Morgan, Jamie Dimon and Barack Obama all knew this. That's why they come out and they announce what they announce. They're looking more to preserve their business and banking system from bigger competition from the UK banking system. Providing fear towards the British public. And no, they weren't looking out for the UK public, although Remainers might state that. Said, oh look, they're going to leave Britain. No, they're not going to leave Britain. They need Britain and they need to be resided within London due to the network which the UK provides and its offshore British jurisdictions. They were scared and they still are scared, and they know fully well that after Brexit, the British banking system will be very, very, very much more competitive than what it is today. But the fact is, yes, Brexit will hurt the UK economy. It's not going to be as devastating as what some may say. The global debt bubble and the debt within the United Kingdom is more of a risk. But yes, there will be a short slump. And yes, there will be a storm. But in the long run, the sun will end up shining nicely. Long term, British banks and the United Kingdom economy in 5 years plus or more will end up booming. Various concepts and fundamentals are correlated with this. The banking deregulation stage, once we leave the EU from the end of March 2019, I personally believe that it will be a sort of minor form of the Big Bang period that was executed by Margaret Thatcher. The United Kingdom and the pound sterling is a participant in the SDR, the special drawing rights basket. Yes, we may be the most smallest country, but we are still a participant in the basket, and there's a very, very high probability that within the next 10 years, the globe will resort and move away from fiat currency, more towards potentially a gold or silver-backed currency. And I believe that within this process, SDRs will end up becoming a global reserve currency. The United Kingdom pound sterling is a participant in that basket. This puts us in a good competitive stage. The Bank of England is also way ahead of the curve when it comes to Brexit and when it comes to the coming global slump. Mark Carney is a very, very, very smart banker. Within the past 12 months, there has been something executed called the Bank of England bail-in powers. So in a nutshell, if we were to go through the same events that did occur in 2008, instead of the Bank of England and the UK taxpayer bailing out the banking system and providing it with more money, there will be a process where the banking system, alongside executed by the Bank of England, will go through a bail-in process where they will deduct and they will cut and evaporate a lot of, well, not a lot, a certain percentage of their debt, what they owe out. So instead of them giving them more money to lend out, they will bail in and cut down some of the debt what they owe out. In return, the assets and the capital cash on their books, they will have the availability to lend that out and to provide it to the economy, therefore bringing us back out of a slump or a recession or potential depression. Also, UK banks have a lot of capital on their books comparative to other banks across the globe. They do have a lot of debt, yes, but they do have a lot of capital cash on their books. And they do have a lot of assets. So if there were to be a decline in their assets and there were to be a wave of defaults, they do have a lot of capital to help them weather that storm. And the Bank of England has a lot of capital on its books as well. And also, once there is not only a slump related to Brexit, but if there is a global downturn within the next couple of years, then once it recovers, however long it does, quick or long term, the London Stock Exchange in a post-Brexit environment will be in a great position. Now, the reason being why is because there's various fundamentals that come into play. Leaving the EU, to a lot of people, including myself, isn't protectionism. It's globalism. It's moving away from a smaller market and embarking upon a bigger market across the globe. The London Stock Exchange will reap the effect of this transfer. In the past year, we've had the possibility of Saudi Aramco going public on the London Stock Exchange. The LSE even relaxed a rule or two to allow it to happen. I think it was a rule restated to state-backed companies going public onto the stock exchange. So they basically welcomed this. But there's a lot of rules, and these rules are very much very much executed by the European Union and the ECB. But there are a lot of rules that are put into place to stop this happening. And also other mainstream activity, Khashoggi murders and Saudi Arabia, their skullduggery, the war in Yemen. That's not really helped when it comes to critics in the political and media realm. We're going to also have a major wave of football clubs going public. We've slowly witnessed it in the past 10 years. But over the next 10 years, there are a hell of a lot of football clubs that will go public, like what Manchester United and many other clubs across Europe and in the UK have done. The LSE will reap a lot of the wave coming from public football clubs wishing to go public. And in return, this will be positive for the UK economy. Commonwealth companies looking to go public due to the non-trustworthy or sort of the not as good mechanics within certain Commonwealth countries because of their financial services aren't up to date. A lot of them will end up resorting to going public on the London Stock Exchange. Basically what Saudi Aramco have resorted to doing, but this will happen with a lot of companies within the Commonwealth. The Middle East as well, a lot of companies will end up resorting to going public on the London Stock Exchange. We've also got the NEX as well. The NEX Exchange, which is an exchange which is basically an entrance door for small companies to do an IPO without large restrictions put onto them. Now, the exchange activity in a post-Brexit environment will very much be a high growth area, solely because leaving the European is a sort of globalism process, and this globalism process will help the London Stock Exchange in the long term. Plus, it would also help the UK banking system. What helps the exchange helps this banking system, because a banking system is what puts companies onto the exchange and what deals with the funding and everything surrounding it. We've also got new emerging markets and industries and sectors coming. Renewable energy, aerospace, travel and exploration. We've got global pollution clean-up industry that's going to be growing over the next 10 years. Digital farming and agriculture. And many others. And all of these will contribute towards the future growth of the British banking system. UK companies will end up embarking on more of an international globalist process. Virgin Galactic, Dyson Electric Cars, even Vodafone and its international presence will be set to reap the consequences of the United Kingdom leaving the EU, and they will reap the consequences of a no-deal Brexit. And then we've got the Commonwealth, which is basically run by the United Kingdom and Britain. The potential growth within the Commonwealth is immense. It's got a population of 2.4 billion people with a current GDP of $14 trillion. So its GDP comparative to its population gives us an inclination that there's a potential future growth of between 10 to $15 trillion over the next 25 years, just within the Commonwealth. And because Britain and the United Kingdom is a leader of the Commonwealth, and the Commonwealth very much comes from London, we got the Queen as head of the state of the Commonwealth, our Prime Minister, PM Theresa May, is a chair in office for the Commonwealth, then the United Kingdom and Britain will be set to reap a lot of the positive and a lot of the advantageous effects from the future growth we will witness in the Commonwealth market. Potentially, as I mentioned, 10 to $15 trillion over the next 25 years. Commonwealth has also got vast amounts of resources, large volumes of agricultural land and farming land, diverse range of labour, skills and expertise. And the potential growth is immense for many industries and sectors that reside within the Commonwealth, especially renewable energy. When it comes to renewable energy, I believe the Commonwealth will be a major market and a major leader in the renewable energy market. We've got the slow creation of the Commonwealth Army as well. If this does occur and there is a big build-up of the Commonwealth Army over the next 20 years, the United Kingdom and Britain will be set to reap the positive effects from it by equipping that army and by selling products to that army. But leaving Europe will give us a problem. The problem will pose the single market. So the Commonwealth and embarking on the globalist process will counter the business loss and the loss of services that is related to the European Union. So what we lose from the EU, we will most likely gain from the Commonwealth and other areas like Asia and America. And also, let's look at the consensus within the Commonwealth when it comes to Britain and the United Kingdom. A lot of the citizens within the Commonwealth love the British monarchy. Harry, Meghan have recently been on a tour of the Commonwealth. We have the Commonwealth Games. Prince Charles and Camilla, they're always touring the Commonwealth. The Queen has been touring it for many years. And the Commonwealth citizens love the British monarchy. So the consensus-wise, we have a good feeling within the Commonwealth citizens towards the British monarchy, and the result of this will be hopefully the result of this will be a governmental and economical structural approach towards the Commonwealth led by the United Kingdom, Britain and the banking system. And also we will be looking to embark on trade deals with other countries. We've got Asia, is a major growing market. China, the growth in China is immense. China is going to be one of the next largest empires. Singapore and its financial services. Indian people hold loads of gold. I believe they hold more gold than what they do currency at some point. Their gold is held as their wealth. They don't hold currency or money or assets like homes. They hold gold as their wealth. And because gold will very much be one of the most valuable assets over the next 20 years, will very much be one of the most rising valuable assets over the next 20 years, Indians will be set to reap from this growth in value. And this will rise, and this rising wave tide will raise the Indian wealth levels. Middle Eastern countries as well, they're slowly going through a liberal, capitalist, democratic process. Japan, even North Korea is going. TU Markets believes that North Korea is becoming a great investment, especially when they open their markets. Currently, they are very, very, very protectionist, and yes, it is a dive out there. And yes, it's not the best place to invest at the moment. But the fact is, down the line, once they do liberate their markets and when they do embark on a capitalist avenue, it will be one of the most valuable investments when it comes to emerging markets. Within 25 years, chances are you'll see McDonald's and KFCs on the high streets of North Korea, and you'll see British Airways flying in tourists in North Korea, and you'll see Cinewells at the end of the street. If that occurs, then North Korea will be a major valuable investment within the next 5 years. But there's a lot of work to be done there. So all these growing markets will help the UK economy when the UK banking system intertwines itself with this growth. And I believe that we should help lead the collaboration amongst a lot of these major economies. The Commonwealth, we could use that as a collaboration amongst Asia, America and Europe, and we could do this with our governance, our democratic systems, and mainly our financial services, banking system, and our future growing tech sector. And there is a platform ground, especially when it comes to the Commonwealth. What unites the Commonwealth is unity. By language, culture, democracy, history, and the rule of law. This is even stated in the Commonwealth Charter. So we do have a moral-based and an ethical-based ground to expand upon. And the world within the next 10 years will need more of what the Commonwealth mainly represents. And that will be unity. Especially at a time now when we see rising populism, radicalism and extremism all across the globe. And what the smart money and the banking system, especially the UK banking system, is looking at this growth. And if we can hopefully collaborate this unity and this moral and ethical based ground with this growth, then it could potentially be hope in the future, financially, economically and socially. So in summary, as explained, British banks very much want and will very much welcome Brexit. British banks will very much welcome a no-deal Brexit as well. Yes, we will have a short downturn related to Brexit, and it could get worse, which will be contributed towards by global risk and a major global debt bubble. But on the long term, the UK economy and the UK banking system will come out of it smelling of roses. And because we come out of the European Union and because we go through a deregulation process, the United Kingdom's largest industry, its financial services and banking sector, will reap this growth. And because it will reap this growth, the United Kingdom itself will see this growth and the trickle-down effect that this growth will create. And also, we're looking to embark on new industries and sectors that are coming up, renewable energy, blah blah blah, like what I mentioned earlier. So yes, coming out of the EU and combining the UK banking system and economy, merging it with this potential growth and new markets will help our economy as a whole. Growing emerging markets, trading with them, that will be a good thing for us. Financially liberalising poor countries, hopefully alongside the Commonwealth, taking advantage of the post-Brexit deregulation stage, and trade with Asia, America and many other countries. We must look at it as Brexit and leaving the European Union as a free market process, not a protectionist process. The way I say it to some people is that we're moving away from the European Union and more moving towards the Commonwealth and the globe. That is a free market process and liberalisation. That's not protectionist. All we have to do, which is what the UK banking system is already embarking on, all we have to do as a country and an economy is to take advantage from this transfer and reformation process. Plus, as I mentioned, the Commonwealth as a potential growth of $10 to $15 trillion over the next 25 years. And a trickle-down result for this will be good for the United Kingdom. Small businesses, medium businesses, large businesses, investors, traders should all look to take advantage of the opportunity that this growth will bring. Big Bang Part 2, minor process, as I mentioned earlier. So if done right, the UK economy will come out of it smelling the roses, solely because the UK banking system will very much take advantage of the liberalisation and the free market process that leaving the European Union creates. Hopefully there won't be a global slump which sort of diverts this process and this procedure, but long term fact is the UK banking system wants Brexit and is liking Brexit, and because of this the UK economy as a whole will come out of it smelling the roses in a long term stage. So be lucky, have a good week, and until next episode, have a prosperous time.